Good afternoon and welcome to the Altitude Group PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Nikki Stella, CEO. Good afternoon.
Good afternoon, everyone. It's a pleasure to be with you here today. And we're very much looking forward to sharing our results with you this afternoon. We had an excellent 6-month period, and Graham and I were very much looking forward to having this investor meet session with you today. I am a little bit under the weather, just so you're aware that I may, if I cough or do something, my apologies. I am just in the thick of a bit of a cold, but I am still thrilled to be here with you today and enthusiastic about all we have to share. So just a bit about me, 18 years executive experience in the industry. I have a track record of identifying and capitalizing on opportunities, revenue opportunities and business opportunities, and launching those products and services to drive profitable growth. Experienced AIM PLC CEO and board member, and named to ASI. ASI is the largest trade association in the US for the promotional products industry, and I've been named to the most influential list many years in a row now. And I'm thrilled to be able to bring that experience and expertise to Altitude Group. And with that, I can hand off to my partner in business, Graham Feltham, who will talk about his background.
Cool. Thanks, Nikki. So hi, I'm Graham. I was qualified with Ernst & Young in 2000. I've had a lot of experience with Belron as Autoglass, and then with StatPro that went from the traditional software group to a pure cloud offering, and then got taken off, bought off AIM, and then onwards to Safety Clean as a private equity owned business, and saw a transaction from Warburgs to Apax Partners, and then at Newmark, a CFO at Newmark Security, and then 2.5 years the pleasure of working very closely with Nikki, driving the business and really getting some growth and some momentum, and communicating with our shareholders. So yeah, thank you.
Wonderful. So we're going to be talking today about driving the business at pace, and I will say that is exactly what we've been up to, moving quickly and working to drive that growth across the business and scalability and efficiency. So in our highlights from the financial, the half-year financials, we saw an increase in our revenues, 53.5% to 11.8 million in group revenue. For gross profit, we rose 24.8% to 4.9 million pounds. Our group adjusted operating profit rose 38.8% to 1.1 million pounds. And our adjusted basic and diluted earnings per share rose 61.4% to 0.71p. Net assets rose to 9.9 million pounds. So every KPI metric that we have, we've been really scaling and growing and seeing that growth come through in our financial results. This slide is really just a quick snapshot on the growth, how we've seen our services are steady, and then we're seeing that scalability across our merchanting lines. And we'll talk a little bit about services versus merchanting a little bit later on today. But we did see that movement towards expansion of our merchanting programs. And Graham, did you have anything you wanted to add on the slide this afternoon?
Yeah, sure. So this really shows shows some of our fast evolution and our evolution of our business model. So in FY22, we had 7% of the gross profit margin was due to merchanting, and now as we move into as we're in HY24, that's turned to 23%. So that's increased threefold as a part of our business. And just as a reminder, the significant contracts coming in from with the university side, the AMP side, then have really, came in through the year, but mainly towards the end of the half year. So that's actually driven a lot from our affiliate model, and we'll go into that more in a little bit in a short time.
That's right. Graham notes that per our last trading update, we assured the market that we would be going live with all of those AMPS contracts, those gear shop contracts. So we'd expect that they would all go live by the end of HY24 September, and we indeed deliver on those, and they are all live now, and they are all commercially trading in the campuses that they are live at. So, but to Graham's point, our affiliate model is driving that growth in the early stages of the first half of this financial year, with the contracts of the campuses really going live in August, late August and September. So you're seeing a small bit of that right now, and that will expand as we go through this year. So big growth opportunities, the industry we serve. This is an important one. So our historical background has always been in the corporate promotional products industry. And that industry in the US is valued at $25.8 billion across the US alone. In the UK and in Canada, you see it's about £1 billion pound business vertical in the UK, and the same is in the Canadian markets. So you see that the US is a very, very big opportunity at $25.8 billion. It's a highly fragmented market with approximately 3,000 suppliers. And we always talk about that 80-20 rule applying to the suppliers, that 80% of the business is going through 20% of the suppliers. This will become an important factor as we talk about our services business and how we provide those services to our supply partners. So 3,000 suppliers and then 23 distributors serving a varying broad-based customer, spanning small businesses, large corporates, and nonprofit organizations, and many, many more. But those 23,000 in that, just to give you an example of what that looks like, 4imprint, I'm sure all of you are familiar with 4imprint, is one of 23,000. Our AIM membership program, which sits squarely in this red column, we have 2,400 global AIM members. And so that represents about 10% in the US market. And so you can see how we have a broad scope of membership through the AIM organization and network. And then we also serve the higher retail collegiate market. This is estimated to be valued at $12 billion with two primary legacy competitors, and we are proving to be highly disruptive in this space. And you may ask the question, why? Why are we disruptive in the collegiate market? Number one, it is a very sensible transition that we made into this space. We identified the opportunity. We saw that the primary legacy competitors were lagging. They had tired spaces. They were not addressing the brand needs of the campus communities. And so with our expertise in brand and merchandise, our technology stack, and then our relationship with our supply partners, we were able to come in and create something truly unique across the campus communities. Additionally, we partnered with the #1 online textbook provider so that we could take those textbooks out of the spaces that we inhabit. And now you have a modern experience. And through our textbook partner, students can order their books online, and then they receive a text. They come into the gear shop, they pick up their books, and they come into really what's become a community hub with music, with light and laughter, and incredible branded merchandise, which is truly our area of expertise. So combined as an industry, as a group, we have access to industries with an addressable market size of nearly 40 billion. So we've really risen the scope of what we can go after now. And this slide is a very important slide. It really shows where we sit within the marketplace and the supply chain. So how does a product move from one portion of the supply chain to arrive in a customer's hands? And I oftentimes go through this supply chain. So bear with me. I'll go through this again for all of those of you who are new, so that you can learn about where we sit within the supply chain and how a product moves through to an end buyer customer. So in the bottom lower corner, you have that gray column. That is your overseas manufacturer. That overseas manufacturer may exist in China, Bangladesh, Mexico, any country where they're actually producing product really from start to finish. And then you have that blue column. In that blue column is your preferred partner, your supplier company. They are really that product printer. The product comes through, they're shipping in mass quantities from overseas, and then they're receiving orders from that distribution line, which is the next channel in the stop with the red column, green column, and purple. They receive those orders. They pick and pull those products from the shelves. They put that logo on the padfolio, the baseball cap, the hoodie, any product you can imagine under the sun, and then they ship that off. And the sales force within the marketplace is really that distribution channel. You've got your membership, which is the red column, your distributors. That's our 2,400 global membership. Then you've got the green column, which is our affiliate model. They are our sales force and receive a commission for their sales from us. And then you've got our gear shops, those collegiate stores where we are transacting both online through e-commerce hubs as well as on campus in campus stores. And that product is then purchased and delivered to either corporates or cafes, you can see in that larger yellow column, or to the campus students who are arriving on campus and purchasing those products direct from the gear shop.
And if you see the light blue column and the red column, that's very much our services side of our business. And if you see the green and purple column, that's our affiliate model and our education, AMPS column, which constitute our merchanting side of the business.
Exactly, and we'll run through that with a lot more focus as we get through the presentation. But that merchanting side is precisely where we are the principal in the sale, and the services are where we connect a supplier to distributor through a variety of means, technology, and all sorts of elements that go into that. So then on this slide, this is a slide that we made last year when we were at our year-end results. And we wanted to be able to showcase simply, if we were to win 1% of the smaller profile markets for the university campus stores, what would that look like? So this is certainly not a slide that's depicting where we are today. It is just our way of showing you how we could impact that 12 billion market and then drive those sales through to our gear shop solution, and then take that growth and go beyond that year after year after year. So Graham, would you like to run through this slide?
Sure. Just make sure my mic's unmuted. So with this slide, so what we've got is a 12 billion market size of campus retail stores. That's made up of 4,000 colleges and universities. So if you average that out, that's a 3 million average store revenue. Now that's, if you look at the weighting of the market, then there's a very small large contingent who could be anywhere between $15–25 million as a campus store outfit. So therefore, there's quite a long tail of smaller universities and colleges. So that's just that 3 million is very much that average. And then you've got an enrollment of 19.4 million students. So therefore, you get an average per student of $619 per head. So those these stores are really made up of contracts which could be anywhere between 3, 5, 7, 10 years, but on average probably a 5-year contract. So if you then say every 5 years those contracts come up for renewal, and when they come up for renewal, then depending on what kind of institution that is, whether it's if it's a state university, then they must go through an RFP and a tender process. If it's a private institution, they may go through a less formalized process, but certainly, so you go through different levels of rigor depending on who that college or university is, and therefore they will come up for tender, and you'll go through the pitch process. So every 5 years, that would be worth a 2.4 billion addressable market each year. That's 800 colleges and universities that would come up for tender or open for contract. and that's 3 million average. Sticking with the 3 million average store size, then that would be 3.9 million enrollment, and then staying with $619 per student. So as we're a new entrant into this market, and we're with some good success in our first active year of going out and tendering, what we want to, this is the same slide we put out at the year end, and this is really saying, what does 1% of the smaller profile of the market look like, just to make it real for everyone. So 1% looks like at about 20 million annual sales. That's around 27 colleges at a profile of about a $750,000 annual sale amount. That would be to the tune of about 200,000 students, and that would be at a lower rate of about $100 per head, depending on that smaller kind of profile of university, where they may not have the big football teams, where everyone would buy all the football merchandise, etc. So therefore, that brings that down. Now that's probably quite a conservative look, but that's just to make that real. If you look at the contract, that could be, just to give you an idea about how the contracts work. So if you looked at a contract that was $1 million, then that would probably have a gross profit margin to itself of about 35%. That would have an EBITDA to the tune of 15 to 20% on that individual contract. There would be an upfront investment made, which would be all about the inventory, and there would be a fit out to be done year 1 or year 2. And that fit out's usually between 5 and 10% of the annualized sale. And that inventory would be on an inventory turn, say, of about 4 times. So that'd be about 160 on the inventory and about 100K or 50 to 100K on the inventory, on the fit out, which would be about $265K. That would return, the return on that investment would break even after about 15 to 20 months, and then it would be it'd be cash generative all the way through for the next 3.5 years of that contract. So that's how the contract dynamics work.
And I can talk a little bit to the pitch season, the sales season as well. So thank you, Graham, for running through what it looks like once it's been won, that contract has been awarded. It's important to note the seasonality of the sales cycle as well. So, and we've spoken about this before. The autumn months, so when you enter in September, October, and November, they're really that RFP season where those universities go to tender to find new service providers to come in and take over outsourced programs, particularly like the campus stores. And so that process really rolls through those autumn months into the early winter. And once all of these sort of the selling season, you're laying the seeds and the foundation to win the award, they're typically awarded sometime late December through January and into that early part of the year. Once those contracts are awarded, then it goes to legal contract for signatures. And then we know that typically we would go live in those spaces in those summer months where there's less activity on campus. There have been incidences where we've gone in early, where we've had requests to move in really on the fly in March or April, but typically it happens in that June and July through August period. So, and just as I said, we won a tremendous amount of contracts last year. And when we went up against those 2 incumbents, we won 60% of the time. And our reputation in the space is really growing and growing in a very positive fashion. So now we're not seeing just smaller, mid-sized, and some large schools come through. As Graham mentioned, we have very large universities in the space where they are coming to us to learn more about our programs and how we can service them. So when you hear about campus programs, you see those very large football schools. And that's what Graham was talking to and speaking to about, a program in one program could literally be a $15 to $20 million program, and where the vast majority are somewhere, smaller than that, from that 1 million to 5 million range. But we are now being seen, and we're having opportunity and a very robust pipeline across all size levels of campuses.
And just to cover off a question just now, then we have 15 contracts with at least 7 million worth of annualized sales as part of that.
Indeed. So who we are today, we are a diversified portfolio group, and this is by design. There is protection around being a diversified portfolio group, and it gives us access to a larger addressable market. And when you see opportunity, you must seize it. And that's exactly what we saw in the campus space, where we saw that we had the knowledge, the technology, the supply chain, and the know-how to become that marketing arm on behalf of the campus profiles. We're delivering something that's completely new to them that they are hungry for. And so today, Altitude is a diversified portfolio group that is the leading end-to-end solutions provider for branded merchandise across a variety of sectors, from corporate promotional products industry and print vertical markets to the higher education market. And you can see the 10-year track record of the company and what's happened in the past few years, that growth trajectory. When we talk about in the interims, record results for this year, we are anticipating record results to beat what we've done last year and continue that scale on that 10-year bar graph. So as we talked about briefly previously, we divide our revenue into two separate revenue buckets. To the left is our services, and that is when we are a service provider to our distributor members and to our supplier partners. And what do we do for that? We'll run into that with a little more depth, but we deliver technology services. We promote our preferred vendors to the top of all of our programs, and all of those things that we deliver to help drive efficiency and drive a knowledge base in our services program and better pricing. And on the merchanting side, this is where we are the principal in the sale of the promotional product, whether that be through our affiliate program, where they are the sales agent for us, or directly through our gear shops, where we have students, families, faculty, professors, everybody across the campus community coming in to show their pride and picking up their gear for their university. Always, 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 technology is at our core. It is the heartbeat of who we are as a business. And what do we have? We've got proprietary platforms. We invest in these platforms to ensure that we drive efficiency through the supply chain. We've got a search engine where we, just like Google, just like other search engines, we're able to help our preferred vendors rise to the top of those searches and to drive awareness about their products. We've got a second to none order management tool. We recently signed a contract. It was announced last year with a franchise group called Fully Promoted, where they saw 25 different platforms and selected ours as their platform of choice. We have design applications, e-commerce. Our e-commerce is live across all of our campuses where we're driving those online sales. And additionally, we're always looking at innovation and artificial intelligence. That presents a great opportunity for us to deliver new tools across art, across efficiency in the order process and purchase orders. We're always looking to drive efficiency and scale through new technology. And here we go, right into efficiency and scale. How do we make money? So we've talked about the two buckets of revenue, right? The services side of this. And this is our membership. So if you hearken back to that supply chain, you saw that red column. This is our membership. This is that 2,400 member strong network that is across the US and the UK. And what do we deliver to them? Preferred partner pricing benefits, freight programs and shipping discounts, community networking opportunities, education, professional development, expanded marketing services that we have as upsell products and tools. And so how do we make money? We make money through subscription fees, and we also make money through that upsell into bigger programs with us. And then you have our preferred partners. And our preferred partner program, that is our supplier partners. Those are the folks, as you see in that blue column, that are the procurers of the products. They're warehousing those products, and they are actually doing all the imprinting of those products. And what do we deliver for them? We deliver top visibility across our marketplace, across our search engine. So when one of our members comes in and they click to look for a pen or a t-shirt or a mug, they are finding our preferred vendors first. Our preferred vendors get preferred technology integration opportunities, guaranteed participation in all of our marketing collateral, catalogs, educational product programs, and merchandise campaigns, and expanded access to our community so that they can spend time, network, and meet through our events and really, really be a part of the community hub that we've developed. And how do we make money here? We derive a percentage of the revenue for all of the orders that are pushed through to our preferred vendors by our distributor network, that red column. Every time they place an order, we are collecting anywhere from 3 to 6% back from our supplier partners. And you'll see how that our affiliate program really layers in that percentage to capture a greater portion of the sale when we get to our merchanting slides. And here it is. So our merchanting, our affiliates, who are they? These are high caliber sales professionals who want to focus on selling. They do not want to focus their time on administrative duties like invoicing and sales tax. Really what they want to be doing is out there talking to their clients and driving new sales. And our solution in our affiliate program really does drive that. So they make the sale, we pay them a commission, and we take a portion of that sale back for us. And so what happens in that is we collect anywhere from 6 to 12% back from the affiliate on every sale that they transact. And so when you layer that on top of the supply chain portion, that 3 to 6%, now we're able to capture a greater portion of margin across a singular promotional product purchase. And then you have our adjacent markets program. And Graham mentioned before, we capture anywhere from 35 to 40% margin in our gear shop locations. And this is where we really provide that specialty expertise on the brand merchandise, driving that marketing arm for our campuses, providing e-commerce tools, as well as innovative spaces to drive that university's brand awareness. And we have that specialized partnership with the textbook provider. So you can see in the bottom right-hand corner, the 2021, 2022, 23, straight up through that bar graph to HY24, where you see that 100% growth across our merchanting programs. I will say to you that the majority of that growth right now is happening from the run rate on our affiliate program through that merchanting arm, because that really had that run rate going into this new financial year. Whereas our gear shops just went live, really all of them, sometime through August and September. So as we get through this year and as we progress through this year, you're going to see that bar continue to rise. And then you'll also see the gross margins as they come together and blend a more of a blended rate. You'll see those margins rise as well. And then finally, we collect SaaS fees for our technology. Again, this is at our core, driving efficiency, driving effectiveness. We have the experience in the space and we have the trust. And this is an area where we are continuing to see potential partnerships grow, whether they be in the UK markets or in the US markets. So expansion and innovation, what have we been up to? What have we been spending these past 6 months on and prior to that? It really has not changed. Graham, you can tick that next slide up. Strong financial health. That is a priority for us as a business. I always talk to our teams about protecting what we have, innovating and growing where we can. So building a strong trust and track record for future growth. 2 years ago, we had a $700,000 line of credit with our bank. Last year, we were able to grow that to 1.7 million. And as we go through this season, we will be working with our bank to support our growth as we go into the future. So building that strong financial health to ensure that we've got a good business for success into the future. Investment in great people, building talent and teams that are geared for expansion. We've been very fortunate to find the talent that we have to be able to launch those gear shops, 15 of those across the country in a very short period of time. And then we've got that core team that continues to build our services and our merchanting arms across the business. We are truly, truly lucky to have such a talented and committed team. Investment in our pipeline and partnerships. All of this growth that we've seen in this year has been driven on the organic growth of the business. We've been able to invest back into our own growth. And so building prospects and pipeline for market to grow market share for the future. As I mentioned, our pipeline on the gear shop side of the business and that AMP side of the business is strong and growing. It's really something to see as we build our brand reputation, the new mix of universities that are coming to talk to us, and that potential growth in this year compared to last year. But we're also seeing pipeline growth across all areas of our business, particularly in our tech across the globe, as well as in our AIM network. And then we're gearing for greater efficiency. Anytime you're scaling a business, especially at the rate that we've been scaling, it is vitally important to ensure that we've got the systems and the ability to ensure that we've got great efficiency in everything that we're doing. So we're always looking at efficiency and operational gearing. And then strengthening our core relationships, maintaining those relationships that we've built through the years, and ensuring that we can utilize that core relationship to help us grow into the future. All of this effort, I'm sorry, go back 1 second. Thank you so much, Graham. All of this effort is really what's driving that 53% increase in revenue to 11.8 million in the year. And you can see in HY23, really that bar, that line that sits across at the half year last year and where we are today, showing that, that great growth that we've experienced. So all of these elements we've talked about, we can really round these up very quickly and then move on to the next slide. But pipeline and partnerships and priorities, we are continuing to invest in our pipeline. We are continuing to extend our relationships and partnerships across the industries that we serve. And we are really looking at operational efficiency and gearing so that we can be efficient in the markets that we serve. Growing that ACS affiliate model. We delivered 10% growth in the ACS affiliate growth to reach 15 million in annualized sales that happened in this 6-month period, as well as that organic growth of 13% from our existing affiliates that we have on deck. We delivered all of those contracts exactly as we promised to do, transitioning those programs on time, hiring regional managers. You'll see why we need those now as we show you the map of where we are across the states. Central operations team and a procurement team. And we are now live across 15 contracts at that circa 7 million gross annualized revenue. And then finally, our services have grown. We've grown 7% from the membership. We saw a big boost last year. That was really a massive, massive recovery from COVID. This year, we're seeing that right now, that 7% growth that we've experienced actually outstripped the market. The market grew anywhere from 3 to 4%, and we grew 7%. And we expect that growth to continue through 2020, financial year 2024. We delivered phase 1 of our fully permitted contract, which I spoke to you about, and we've now expanded our technology services into Canada. So every aspect and every division of the business is churning and producing. These are just some visuals across the campus stores that we're serving right now. Kern out of California, ACU out of Texas, and St. John Fisher out of New York. And this is the map that I was talking to you about. So you can see we've got a stronghold in the Northeast from Vermont and Massachusetts down through Philadelphia area and Maryland. And then we've got upstate New York, Michigan, Indiana, South Arkansas, Texas, California. We are really expanding across the U.S. And my hope is that the next time that we have a map that we're sharing with you, that we'll be able to show you many more speckled dots across the country. And these are a selection of the brand partners that we have within our gear shops. We talked to you earlier in the year or last year about our partnership with Apple as a reseller in the higher education space. This is meaningful for us, and it is a great competitive advantage for us. We also have relationships for the procurement of Nike, Under Armour, Adidas, MV Sports, Champion for those athletic teams when we're talking with athletic teams and delivering those athletic apparel pieces, as well as many other brand partners that you see on this page and that we have also that we're not showing you today. And so, Graham, I'll pass over to you to talk about how we performed.
Thanks, Nikki. So within the group performance for the year, we have revenue increased by 53.5%, and that's 59.3% on a constant currency, with the FX rate swinging a different way this year. Gross profit increased by 1 million, with a mix effect of gross profit margin to 41.8%, and we'll go over that more in the next slide. Adjusted EBITDA increased by 38.8% to 1.1 million. And adjusted PBT up 94% to 0.5 million. Adjusted EPS up 61% to 0.71p, which is nice to grow from a positive, for half year on half year. So basically what this slide will say is we're growing fast.
Indeed.
We have in our segmental performance, we can see services are growing by 7%. And that's as opposed to the 4% industry rate of growth over the same period. That's an average over the 2 quarters, and doing very well. The merchanting side, made up of the has grown up by 100%, made up of the 2 distinct parts: the affiliate model, which, if I just step away from the numbers for a second. So at the beginning of last year, we had just under 7 million annualized. And $7 million annualized dollars. We've doubled that to just under 14 million. At the beginning of this year, we've grown it another 10%, to circa 15 million. And then we've also experienced about a 13% organic growth rate. So from that expected annualized, then they're performing higher than that by about 13%. So that's some really positive moves from the in our affiliate model. And then on the flip side of that, then we have the AMPS side as well. So that's had an impact. That's grown 8 times since HY23 to HY24 from a low base, but still it's making an impact. And you can see that in the gross profit margin. So, I mean, as opposed to the services model, which runs at about 92.5%, 93.5%, and it kind of varies only really to do with if we have events or we have catalogs where there's a bit more cost coming through on the cost of sales, so that holds around that level. Whereas the merchanting level has started, it was 9% in HY23, driven fundamentally by that affiliate model margin. So it's a scalable volume play in the market compared to our compared to our AMPS contracts, which then have impacted positively the gross profit margin to 14.6. That's 5.6 percentage points, which, as I mentioned earlier, runs at about 35% gross margin. So you can see that's where that would tend to. Overall, the impact on our group gross profit margin is a downward trend, because we've got a higher margin of that merchanting value coming through. So that comes from 51.4% to 41.8%. Delivering really that value, which is which can be seen falling through in our from increase to gross profit overall by 1 million. We have kept central costs flat year on year for the half year. In our cash performance, so I'll walk you through this as some of the key areas. So the increase in trading activity is provided us with an immediate uptick at the top line. And then what I'll go through this and just pick out the investment in AMPS that we've made in this 6 months. So we have an increase in inventory, which is the 0.7 million. And then if you go down to the net cash flow from investing activities, where you see that outflow of 1 million, of that 1 million, we have development costs of about circa 0.5. We have some other equipment, usually laptops, etc. And then we have the investment in tangible assets, the contract assets, and also equipment for the stores. So and they total 0.4. So the 0.7 plus 0.4 million, that's 1.1 million investment in our AMPS contracts. The net cash outflow for the year is 0.7. So if you added back the 1.1 million, that's cash generation of 0.4 from the rest of the business. So that just shows the impact and the investment we're making. Now, we're not expecting to then double that inventory in the next 6 months. That's actually, you get your inventory at the front end of the contract, and you also set up your contracts at the beginning too. So therefore, that's where the contract assets come into play. So therefore, you wouldn't expect that to repeat in the second half at all, unless we suddenly won a lot very quickly and they wanted it in straight away. So therefore, which is unlikely to happen given the seasonality of the tender process.
And Graham, it's fair to say that we're capturing the first 6 months of the year, that snapshot, just after having gone live, right? So just after having made that investment in getting those gear shops live, and really only having 8 weeks under our belt, or 6 to 8 weeks under our belt with a go live commercially trading business. So what we're seeing here in our half year is a very fast snapshot of go live and the team's efforts to get us there.
Absolutely. And that leaves us at the end of September with an undrawn facility of $1.4 million. And the reason why we had the facility originally is for twofold. It's the growth in the affiliate model, and secondly, as a way of smoothing our cash flows from our supplier revenues in the services, as they can be quite lumpy. So therefore, those are the two reasons. We've funded the growth of our AMPS contracts within, from that financing, and we still have some headroom, which then sees us through for the remainder of the year to operate within, to smooth out that cash, the lumpy cash of the services. So therefore, that sees us through in our existing model. Now, additional growth will therefore need further financing, and we have an annual renewal with our bank, which we've been talking to and working with for the last couple of months. So it's well through that process. And then we'll be expecting to then enter the new year, as in calendar year, then with a renewed facility, and then the ability to grow from that. If we become particularly if we grow in our wins, then we will then look at what our financing options are for that, and that would be a mix of bank, and then if we're particularly successful with some whales of contracts, then we will then go and look to the market and look at other ways of financing along with that banking facility as well. So that's the options ahead of us, and we'll only really, as we go through that award of our pipeline, is when we'll really identify that and then be able to then take action appropriately, which will really be funding our growth into the future, which is an exciting time for us.
Absolutely.
And we've covered off most of the points here. The net assets have grown from 9.5 to 9.9 million, and we've covered off all the areas there. We had a 0.2 pounds delve into the facility at this point in time.
So building on strength, and that really is the outlook, is that we remain very bullish, and we are driving the business forward. We have a very talented group of people that are working on behalf of the business, that have traveled the country to get these gear shops up and live. And then we have those divisional leaders across the business who are really watching the ship and making sure that we're continuing to grow across all areas of the business. So there's focus on every single segment of the business with no balls being dropped. We remain focused on scaling through new contract awards and gearing the business for long-term success. We're very, very focused in on that efficiency and operational gearing. And so we're happy with the results of where we are today, and we're well placed for continued accelerated future growth. And the board is confident in the long-term success of the business. it's really, really pleasing to note the momentum that we've had, and actually the momentum that we are picking up right now within our contract pipeline phase. And we're really looking forward to when we can update the market on how the tender season has gone for us. And so with that, I think that we can take a look to answer some questions.
Nikki, Graham, thank you very much for your presentation this afternoon. And if I may just bring back up your cameras. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab situated on the top right-hand corner of your screen. Just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we have received a number of questions throughout today's presentation. Can I please ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end.
Wonderful. And we'll answer as many as we can here today. And if we need to follow up post-event, we always do that to answer any questions that that we may not have time for, or we may not have the answers to for you at this moment. One of the easiest ones that we can answer, have you managed to convert 100% of the major new contracts announced in March 23 into revenue earners in H1 as suggested in the trading update? Yes. That's very simple. We can say yes. We mentioned that in our trading update. We had a core team of people that traveled across the country. They were in Texas, they were in California, they were in Michigan, they were in the Boston region, standing up all of these gear shops, making sure that we had the technology aligned and the e-commerce sites built out. And so yes, 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 we have converted those. And then we also have our business development team that is out there pounding the pavement to bring in new business. And we're going through that tender season right now. Gear shops look to be an exciting business. Can you outline projections for growth of the business, please? In particular, what are your plans and aspirations to recruit more colleges? And what are the revenue projections year on year for this business? I think that is one. Well, I can harken back to our full year presentation last year, where our aspirations, and this is not just for the gear shops, but our aspirations for the business was to build a $100 million business. That has not changed. That continues. And we are each and every 6 months, we're closer and closer to our goal. And we are relentless in our efforts to get to that point, to building a $100 million business. What are our plans to recruit more colleges? We have a team on the ground that are recruiting, that are going and they're visiting campuses. They're responding to RFPs. They're pitching. I go in and I work with them as well to go into universities to talk to them when we have bigger opportunities. And so it's all hands on deck to help grow this business. So we are very much on top of that. And the revenue projections, it really does depend on the size and scope of the universities that we bring in. So we do have some modeling that we've done internally, but it really just varies on the size. We'll see as this comes through this tender season, and we'll be able to inform you across the board on how successful we have been. But we can say that our pipeline this year is larger than what it was last year. So we are really going after the business with gusto. We're going after it to really drive it and to bring it home.
Absolutely, and there's also some organic growth that's expected within the new contracts. As you grow with the experience of the contract and building that relationship with the university, getting in tune with all the timelines of the programs, who are the right contacts, what are the initiatives that are happening and when, and then introducing new lines from our experience with other contracts, then you can see actually this would really help that university. Then you can grow that relationship, and that's the normal nature of these kind of contracts. So there's a first get the profile in, operate it, and then build. So that's what we're expecting with our existing and then our future profile of contracts.
Indeed. And I am just looking through. Are you comfortable with the cash reserves for to fund the gear shop expansion and roll out the medium term? I think we addressed this and we talked about the strength of our banking partnership. We do have a very good relationship with our banking partner, and if we were to to win a very large contract or many large contracts, we would be talking to the market and working through a variety of plans on how we would go about scaling the growth. But we are currently, I think we're comfortable, Graham. We're comfortable with where we are right now, and so
Yeah.
I mean, he's probably the more important guy to ask that question to. So if he's comfortable,
I saw the question, so I decided to go on a bit more of a diatribe earlier.
Exactly,
So,
exactly. So thank you for that question, and hopefully we've answered that for you and given you clarity on that piece. Plans for scaling the companies for growth. We're doing that now. We're doing that every single day, and I think we spoke a bit to that. We do have that $100 million aspiration. We have teams on the ground, sales teams on the ground. Not only in the gear shop space, but across all of the corporate promotional side, where we are working to increase companies that we're working with, drive new partnerships, bring in new universities, bring in new agreements. We don't stop. So we are continuing to be a strong sales organization that is going to drive revenue growth.
Absolutely.
Yeah, go ahead, Graham.
How's your investor reaction been? You mentioned in the last presentation that you were going on the road. Whenever it comes to results time, we're always on the road, and so we've brought this meeting in the middle of that, so that then we're having meetings and it's sandwiched across many meetings. So we're meeting a lot of existing and new. And building those relationships with those bigger institutions who are keeping an eye on us and wanting to understand what's going on. So those are the that's been ever since we've come out with numbers in the market from March 22. That's been certainly the way we've been communicating in an open and hopefully you see that regular basis.
Exactly. And then there's the question, approximately how many colleges, universities are coming up for tender during the next calendar year? And what percentage do you anticipate winning from these renewing contracts? I would say that last year's season, we won 60% of the time that we went out to and pitched the universities. So we won't know exactly who's going to tender until those RFPs are released. Right now, we are in that season, and we're seeing them come across. And we have folks on the road today that are meeting with campuses to learn more about their programs and how we can work more closely with them. So, as I mentioned previously, our pipeline this year, comparatively to last year, is a much larger pipeline that we are developing and growing, and hopefully we'll see those seeds result in success.
And we're starting to benefit from referrals now as well. So that's where the referrals come back into the RFP season, and from universities who we serve now.
Exactly. And then we had a question. Given the universities you have signed so far, what is your understanding of phases, timings of the sales cycle, and what reasoning for saying next new wins will be Q2 next year? I think I ran through this, and I will run through it briefly again. There is a very specific sales cycle within the campus communities. So this is across all higher education. The norm is that they would go to tender in September, October, November, sometimes even in December. They'll make their decisions December, January, Feb, and then we announce sometime in March. Now, there is always the chance that we'll win some throughout the season, be notified of those. And if that's something that we would want to come to the market with on a significant win, we would certainly inform you of that. But we are knee deep in that tender season right now, where we're out there and we're talking to universities, and we are just really ticking through all the RFPs that have come across our way, building those out and then presenting to those universities. Does the management foresee any acquisitions in the near to midterm? We do get this question, and if so, how would any acquisition be funded? I think we touched on this too earlier, Graham, right? We are very focused. We've got such organic growth coming our way, and we are growing through all of that organic growth phasing right now. If the proper company, an opportunity came our way, we would certainly not turn away from it. And that's something that we would come, if there was an opportunity that could not be passed up, that we would probably come to the market to talk about. But right now, we are very, very highly focused on the business at hand of scaling through the gear shops and through our other business avenues right now.
Absolutely, it's a question of priorities really at the moment. So there are things out there. There are things we could go for, but the priorities and the win, really, that value proposition for us is really looking at growing that university model. The AMPS.
Yes, and there's one last question that I'll answer today. I believe we've hit just about everything else. And the number of employees with the business, and would it require a much larger sales force? I don't believe so. I think we're very well situated in the scale of the business. We do see student help at some of the facilities that we have. So we do bring in students to work amongst in the store setting. But we don't see that we're going to have to add massive teams to the gear shops, aside from bringing in part-time staff. Do you have any other thoughts on that, Graham, that we would share?
Yeah, no, it's all about the gearing side, the operational gearing side, and certainly on the services, it's been up and running well, and so there, and then on the affiliates model also, that's all about scale and growth and bringing on those new affiliates. And then we've done the investment in people for the key members and those key experts in various different roles within the AMPS area, and so therefore whenever there's a building and a growth, then it would be an expansion, but then not necessarily so much at those key roles, but within the teams to be able to manage the volume. So therefore it'll just be incremental
based on the growth
as required.
Yeah. Wonderful. Well, everyone, thank you so much for your time in joining us today. If there's any questions we've missed, we can hop on those and try to provide you answers to those. And thank you for joining us. And we're looking forward to updating you in the near future.
Yeah. And thanks, Edward. Delighted you're a shareholder too. So yeah, great.
Yes,
thank you.
Indeed.
Nikki, Graham, thank you. And I think you've addressed all those questions you can from investors. And of course, the company can review all questions submitted today, and we'll publish those responses on the Investor Meet Company platform. Before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Nikki, could I please just ask you for a few closing comments?
Well, as I mentioned in our outlook, we are pleased with the progress of the business in the first 6 months, and we are looking to continue to grow and scale the business in all areas of the company across all divisions. And the board are confident. We are confident in the long-term success of the business and the growth potential. So we hold those $100 million aspirations for the business, and we're working hard to achieve them.
Nikki, Graham, thank you for updating investors today. Can I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Altitude Group PLC, we'd like to thank you for attending today's presentation. Good afternoon to you all.